In this video, traders, we're going to talk about biggest mistakes traders make in Q4. Stick around. Hey guys, coming into the final quarter of the year, Q4, and I probably should say the biggest mistakes that I've made in Q4, but I know that other traders make them as well. Of course, we all go on our very, very similar journey. We're on our own path, but we generally have the similar hurdles along the way. And Q4 is a funny time of year because coming to the end of the year, it feels like there's a lot of weight on what you're going to make and your performance, and you you benchmark and you're staking your identity on your performance there, and it feels like a lot of pressure sometimes, especially you've got a firm and you've got this and you've got that, and maybe you've got investors, or maybe even if you're just a retail trader trading on your own, we tend to put a lot of weight on this kind of end of the year thing. So biggest mistake. So the first one, without a doubt, is chasing better gains too hard. So if you've had a reasonable, let's say you've got two sides of the coin. One is you're still kind of on your journey and you haven't yet got to profitability and you've had a losing year. Fine, it's normal. That's the path for many traders for several years until things start to kick into line. Don't beat yourself too much about that. Final point in a moment. But the danger you can have is that you just go, right, I want to try and get this, and you try to recover it in the last few months of the year, thinking, yeah, I can get it back and get it back. And you overtrade, you get too aggressive, you chase too hard, and you end up doing more damage. You go into the new year really beaten up and down about things and feeling despondent and frustrated and all that kind of stuff. And it's just a bad way to start the year. Listen, if you're down on the year and you haven't done so well and you've not got the traction you want, don't look at that. Don't look at that as a benchmark of your progress. Look at how you've changed the way you look at the market. Look at how better you are at dealing with risk, how you understand the dynamics of the setups better, how you're becoming more disciplined. You might not have them all in line yet to get where you want to be, but they're definitely better than you were 1 year ago. Just think about the trader you were a year ago coming into this, or 6 months ago, and you know you've made progress. So attach your worth on that rather than the P&L. Because the P&L is something that comes into line later when everything starts to fall into place, strategy, mindset, dynamics. I talked about aligning your strategy and your mindset and how you have to bring them up both together. You can't work on one and not the other because the whole thing falls over. Same thing with trading. You know how far you've come. So don't try and push too hard. Say you've had a good year. It's so tempting, guys, to try and put the throttle down and say, you look at your number and you think, a little bit more. Just be careful. Don't throw it all away for the sake of an extra couple of digits percentage return or an extra couple hundred grand or whatever. You just go, whoa, easy. It's been good. Just stick to the process. And my advice as well is to have a drawdown cut out at the end of the year, because there's a mental thing about the end of the year. It's stupid. I don't know why we do it, but we do. And that's just the way that society's set up in the West anyway. We've got the end of the year, bang, and you don't want to be drawing down massively. So have a kind of trailing drawdown stop that if you hit that, go, right, I'm done now for the rest of the year. I want to end the year on this level so that I don't feel awful about stuff. You might never hit it and you probably won't, but it's worth just having in place if you've had a good year and you don't want to end it because you're pushing too hard to try and get more and more. So just a general observation there, guys. Chasing better gains in Q4. It's okay to push. It's okay to be aggressive in terms of looking for the trades and doing this and working hard. But when that results in over trading or taking substandard trades or oversizing, it can end in tears. And you know this, but in the mind, we're like, oh, finish strong. Just watch that one. 2 is not adjusting after summer. Summer tends to be quieter, a little bit more spikes in volatility, contraction, spike, contraction. So just be mindful of that and say, okay, hey, I need to adjust. Maybe we're going to get some more stretching stuff. Maybe I need to be quicker to adapt and understand that we might have some more extensions than I was looking for, some more days in the persistency of trend, that type of stuff, and adjusting for the fact there's more volume coming, there's more money flow coming in Q4. And number 3, looking at stats too much. A lot of people talk about Santa rally, they talk about this, they talk about that, Thanksgiving stuff, and there's loads of stats about that. And they're generally pretty bullish most of the time, especially Santa rally. And it can be a thing, no doubt about it. It can be a thing. And you can use it as part of your edge if you like, but a sliver where you say, okay, I'm long anyway, I'm looking to get long anyway, I'm already positioned long, this will just help my cause. Rather than taking it because of that, I think too many traders rely on it, and then when it doesn't happen, they're like, oh, it didn't happen. Don't forget, it's a statistic over many, many years, and it says, hey, this is what happens over many years. You could have 2 or 3 years where it doesn't happen, it still stands true. So just be mindful of that. The statistics it's not 100%, it's a weighting, but over all those years means that it can have multiple years where it doesn't work, and those are the years you're trading it. So have it there, fine. Say, yeah, it's a part of it. If it helps my cause, helps my portfolio of risk, great. If it doesn't work, fine. So just be careful of those stats, because they tend to come out at Christmas and everyone talks about them. I'm sure I'll do a video as well talking about some of the intricacies of that nearer the time. Number 4, being too fixated on percentage return. As a trader, it doesn't matter. It doesn't matter. Capital is a tool. It's a tool. We are not a fund trying to get a percentage return on our capital. We're using it as a tool because we're dialing up the risk, we're dialing down the risk. So just be mindful of that, because some people are saying, right, well, maybe you've got $500,000 at risk, but you don't have that in your trading account. You don't need it because you're using some of the margin of this. So you might say, well, I've only got 100 grand in my account, and the percentage return on that might look obscene. But actually, the money you've got at risk is different. So it also depends on your risk tolerance, it depends on all this. So personally, just be a little bit careful about percentage return, because you can look at the number and go, that's a ridiculous percentage return. I'm an absolute genius. But actually, you've been taking a lot of risks to get that. And of course, there's a risk-adjusted return. All these metrics as well, I understand that. But just be careful not looking at that absolute number, and just look at, risk-reward ratio on the trade. That's better for an individual trader, in my opinion. Number 5, beating themselves up too much. It goes back to the first thing. If you haven't got the results you wanted coming up to this year, by the way, the year's not over. I'm putting this out here and it's mid-October, so there's plenty of time. This is a good time to go, okay, do you know what I'm going to do? I'm going to stick to my process. I'm not going to worry about the returns. I'm not going to worry about the profits. I'm just going to worry about sticking to the process, building the confidence, so that I can go into the end of the year feeling more confident about my process, feeling more confident about my discipline, feeling more structured, feeling all those things, so that you've got momentum going into January. You're not looking at your P&L going, oh man, I didn't make any money this year again, and thinking, oh no, not another year. You're like, okay, I didn't, and I didn't try and get it back, but I focused on myself for the last few months of the year, and look, I'm improving in this, I'm better at journaling, I'm better at sticking to the risk, I'm better at the discipline, I'm better at all these things, and then pushing that momentum, and then you'll just gather and keep that steam up January, February, March, and who knows where you could be in the middle of next year, who knows where that P&L will be in the middle of next year if you keep that momentum going and focus on that in the final quarter of the year. So don't beat yourself up too much. Just focus on the process and use that as the fuel to drive yourself through. All right, guys, biggest mistakes traders make in Q4. What's your biggest mistake that I've missed out? What do you normally do at the end of the year? You go, you know what, I'm not doing that again. Let me know in the comment section below. Take care, guys. Appreciate all your support. Bye-bye.